Good day, good people. My name is Mr. Nkosi. I'm gonna take you through the fringe benefits, income tax and NC on right of use of motor vehicle. We are talking about the situation whereby the employer has allocated a certain motor vehicle to a certain individual full time, and that particular employee is using the motor vehicle for business and private purposes. So we are concerned about how we calculate a taxable benefit. We calculate a taxable benefit by using a determined value. One will say, what is a determined value? A determined value is the original cost price of the car, including VAT, but excluding finance charges. I will repeat this one. A determined value is the original cost price of the car, inclusive of VAT, but exclusive of finance charges. Okay, we take a determined value times the benefit. So if the car came with a maintenance plan, you are told that it is a maintenance plan. To calculate a benefit, we are using 3.25 per month. It's a percentage per month. If there is no maintenance plan, then we use 3.5% per month. Therefore, we can say determined value times the percentage times the period in use. If the car was used for 12 months, full 12 months, then we're going to say times 12. If it's 8 months, times 8. We don't divide by 12 because the percentage is per month. It's unlike the one for in case 15% per annum. No, it's unlike this one. So we are using 3.25 per month. Then we're going to say times the period. Don't divide by 12. You'll get a wrong answer. If employee receive a used car, if the car was used by another employee prior the current employee, then we deduct 15% for a completed 12 months. But if the car was used for 8 months, then we do not deduct any depreciation. We will deduct a 15% depreciation for the full 12 months. If it's 24 months, then we'll depreciate it twice. 15% for the first year on a diminishing balance method, and 15% again for the second year. Please, it's for full 12 months. There will be no taxable benefit if the private use of the vehicle is infrequent or incidental, because we want to calculate a taxable benefit on a private use, not on a business use. And if the company is a pool car, it's not full-time allocated to any individual, only those with a valid reason and in a short period of time can access the use of the car for days or hours. Then if the car is a pool car, we do not calculate a taxable benefit because that car is not full-time allocated to any individuals. So for you to get clarity, then let's do a practical example. Mr. A was granted the right of use of the company car from 1 March of the current year of assessment. In addition, the employer bears the full cost of fuel for both private and business traveling, as well as the full cost of maintenance of the vehicle. The vehicle was purchased by the company 2 years ago at a cost of 278,280. The cost price included VAT of 28,280 and finance charges of 48,000. Mr. A is paying 200 a month for the use of the car. You are required to calculate the cash equivalent of the benefit for the current year of assessment. The practical solution. We take the determined value of the vehicle, of which is the cost price inclusive of VAT but exclusive of finance charges. Then we take 278,280 less 48,000 because the finance charges must be deducted. Then we get to 230 less a depreciation for one period, of which is 230 to 80 times 15%. Then the depreciation is 35,542. Then the determined value now is 195,738 times the benefit. So the benefit is 3.5% per month since the car came with no maintenance plan. So for 12 months, it's 82,210 less a consideration. The employee pay 200 per month. So for 12 months, it's 2004. The cash equivalence of the benefit is 79,810. That's how we get our taxable benefit if the employee is using the company car. Thank you. Thank you. I hope you enjoyed your lesson. Please, you are more than welcome to subscribe to another ones.